Hello everyone, today I want to quickly explain to you the difference between debt to equity ratio and debt to asset ratio. Alright, so debt to equity ratio, simply saying, is the ratio of debt to equity, while debt to asset ratio is simply the ratio of debt to the total value of the organization. In this case, we're saying is debt plus equity. So meaning, if question says so if a question says debt to equity ratio is 40%, what that simply means is all you need to do, rewrite this way and write 40 over 100. Of course, 40% is same thing as 40 over 100. So what this means is that debt is 40 and then equity equals to 100. So the total value of organization, total value or total asset in this case would definitely be 40 plus 100, which is 140. On the other hand, if I'm told debt to asset ratio is 40%, remember asset is combination of equity plus debt. So which means debt over equity plus debt equals to 40 over 100. And so this simply means that debt equals 40. If debt equals to 40 and the total equity and debt is 100, what it means is that equity will be 100 minus 40, which is 60. All right. So the next time you see debt to asset, debt to equity, if you're interpreting, all you just simply need to do is to rewrite that ratio in percentage format and then just track debt to equity and then debt 40 and then debt plus equity is 100. And then you do the work back to get the percentage. I hope this is clear to you. Thank you and see you again in the next video.